John Mauldin. He's the president of investment advisory firm Millennium Wave Investments, and more than 1 million people read his newsletter, by the way. And his book, Endgame, The End of the Debt Supercycle and How It Changes Everything, made the New York Times bestseller list. John, great to have you with us.
It's always good to be with you.
Okay, so do you buy, these cuts that Scarlett was just talking about, these cuts in the forecast, are you buying into that as well, that in fact we're going to see more of that to come?
Well, I was buying into it last quarter. I think we're going to see a much lower than trend growth for the whole year. And I think it slows as we go into the year. We're at stall speed. There's not a lot. We're getting rid of the stimulus, and as much as my conservative brethren, hate to admit, it really does make a difference.
Right.
We still have very, very high structural unemployment. Look at it this way. We have the same number of jobs in the U.S. as we had back in 2000, but we have 30 million more people living in the country. We haven't grown. We haven't seen our private GDP. We're doing more with less.
Okay.
We haven't seen private GDP grow for 12 years. And that's squeezing the consumer. The average median wage of a human being, of a U.S. worker,
right,
is the same as it was in 1998. So no growth in their income.
So it's great for companies, not great for,
it's great for companies,
for workers and for people, yeah.
Well, but it's great for companies unless you're trying to get those people to buy something.
Right.
And they're getting squeezed because of the inflation that we're seeing in food and energy. Then,
John, in your view, where really is GDP? Where is it exactly?
Well, we have to be careful of what we call GDP. We have the number that's the headline, and then we have the number that's that's boosted by debt, and then we have the number that's boosted by government spending.
Okay. So take all those. Take those two out.
You take those two out, and we're where we were 12 years ago.
Which is?
It's just private GDP. We haven't seen any growth, and that's why private. This is 10 billion.
Okay.
Something. It's a number.
Okay.
But what it means, that is why we haven't seen average wages go up, because the private enterprise hasn't grown up. What we've got to do is figure out how to reduce government share of GDP and increase productivity. There's only two ways you grow your economy. You can increase working population, and you can increase productivity. Government spending, with the possible exception of infrastructure, doesn't increase productivity. It just transfers money. It's shuffling things around. What we've got to do is to figure out how to get small businesses, because that's where you get your job growth. We've got to get small businesses hiring and growing. We've got to figure out how to make it easier for them.
So does this mean, though, John, that the stock, okay, if take out government spending, take out the debt, does this mean that we are overpriced in the equity markets then?
Well, equity markets are a form of valuation of earnings. And a lot of when we think of the big stock market, they're getting their earnings from overseas. They're growing. They're figuring out how to cut costs. So those are actually kind of two different things. Okay. Now, over the very long cycle, growth of the economy and growth of earnings are going to roughly parallel. But in the short term, you get big fluctuations.
Okay. Well, back with us is John Mauldin. He's the president of investment advisory firm Millennium Wave Investments. And John, one of the ways that we had teased you earlier was you wrote, in a recent newsletter, and I want to quote from here, that you're worried about the survival of the country economically. That is a very broad and dire statement. What are you talking about exactly?
We are running deficits higher than the growth rate of our income. And in economic terms, you get nominal GDP. So that's what we really see grow, and that includes inflation. You cannot run deficits higher than nominal GDP for more than a few years without really beginning to create problems for you. Just like if somebody gives you 5 credit cards and you max them all out, right, then you can't pay the interest. Okay, you got to cut back. In the U.S., $1.5 trillion worth of deficits is eating into our ability to borrow money. Now, we can do it this year, we can do it next year, but I think in 2013, the bond market says, guys, you're not serious about this. So sometime,
after the election. After
the election, we've really got to come together as a country and decide how much Medicare do we want and how are we going to pay for it. And my concern is, I hate using the word tax and increase in the same sentence. I'm one of those guys. But I also know that we've got a cancer and it's debt,
right.
And we may have to take something toxic into our body to kill the cancer so that we can survive.
Okay, but I just want to be clear, though. So what you're saying, and we're out of time, but what you're saying essentially is by 2013, unless we take care of the deficit problem, we're going to find ourselves in another Greek tragedy.
Yes, of epic proportions.
Okay. Sounds very poetic and yet at the same time scary. John,
it is scary. Thank you very much.
Appreciate it. John Mauldin, president of Millennium Wave Investments and also author of the bestseller, the New York Times bestseller, Endgame, The End of the Debt Supercycle and How It Changes Everything. I recommend you read it.